Okay, Accounting 1 students, here's an abridged version for Chapter 14. Chapter 14 basically has just a lot of words with 3 transactions in the whole chapter. The first transaction that you need to understand is 14.1, recording payroll. And that can be broken down like this. This is the first transaction for the book. That is salary expense. Salary expense is debited. And the amount it's debited is the total amount of payroll which you get from the total column in the payroll register. It's total. So it's total gross earnings. That's regular earnings and overtime earnings for all employees. So that's the amount of salary expense, and it's a debit. Then you are going to credit all of the payables, which are actually the deductions. So the examples are federal income tax payable, Social Security tax payable, Medicare tax payable, health insurance payable. Like all the deductions are payables. And then one last credit. So that'll be a B here on my little thing. Credit cash. And that is the total amount of net pay for all employees. Remember, it's all employees. So all this information is to be gotten from the payroll register. Okay, that's 14.1 in a nutshell. 14.2 now is us having to journalize all the payroll taxes that we have to pay. So this is one debit to what's called payroll tax expense. And it's a debit. It's an expense. Expenses are debited. And this is the total amount of taxes paid by the employer. Not the employee, but the employer. And they are, so you're going to credit Social Security tax payable, and we do an employee match. So if we charge our employees $8 for Social Security, then we pay $8 and we, boom, send the government $16. So we have to match their dollars. That's called match. Medicare tax payable is also, oh God, not employee math, employee match. Mrs. Colbinson. Okay. This is also an employee match. So I'll type that again. But the book's always going to give you that amount. You don't have to calculate it. And then there's 2 others that we have to pay as the employer. Unemployment tax payable Fed, and unemployment tax payable state. And that's a percentage. The federal is 0.8%. And state is a little higher, 5.4%, I think. So that's the second transaction for chapter 14. 14.3 talks about the forms we have to fill out for the government. The first form is a W-2, which is what's given to employees. The next form is a 941, which we send into the government. And then the last one on 344 is a W-3, again, sent to the government. So there's no transactions for 14.3, that section of the book. 14.4 is another form that we have to send with our payment. And here goes our payment, which is the third transaction of this chapter. And it basically, you are debiting one thing, three things. Debit all payables for payroll. This is when you are actually closing out payroll accounts, and you do this each quarter, usually once every 3 months. So it'd be, debits are employee federal income tax payable, Social Security, Medicare, and cash is credited at the 3 accounts to get the total for the credit to cash, which of course is a check, and you send it with that little pink slip of paper to the government, and the government is happy and we are happy. The fourth and fifth transaction, how can I do this? 4 and 5 are unemployment, tax payable, federal and state. Debit the payable accounts and credit cash for each. Again, you are just closing out the payable accounts and sending the checks to the government. And that's chapter 14 in a nutshell. Thanks for listening. Can't wait to see you all in person. Enjoy your weekend.